The Nasdaq and the S&P fell hard today, but off their lows, and Tesla just reported. We're covering both of these in today's video. First, let's get to the stock market. Here is the heat map behind us. A lot of red on the biggest companies here. A lot of red. At one point, the Nasdaq was down 2.3%, and the S&P was down about 1.5% from its lows. The Nasdaq finished down about 1.6%, and the S&P about 0.7%. So, big red day in the market. No idea why. Remember, whatever they tell you the reason is, it's probably wrong. And the reason being is everybody wants to sit there and justify why stocks go up and down in the short run. At the end of the day, it's completely random. But what drives value in the long run is valuation and the fundamentals of the business getting better as long as you pay a reasonable price. Guys, there's a lot of great companies in these big companies. But if you overpay for them, you end up hurting yourself in the long run. And that's what's important to remember. Tesla, one of the most important of the Magnificent Seven stocks, hit a high of 414. Since then, it has fallen to 100, back in the low mid twos. And guess what? Revenue is up 100%. Profits up over 100% since then. So kind of interesting for a company that's fallen 75% and then rebounded from there. So guys, let's get into Tesla. They beat on earnings per share. They were expected to report 58 cents. They reported 72 cents. But they missed on revenue. They were expecting 25.4 billion. They reported 25.2. Let's see how they're doing after hours right now. Immediately following, wow, up 6.5% right now, about $14. Big surge after hours. If you remember, yesterday, the E. coli thing happened at McDonald's. It was down 10% after hours. Didn't finish as bad today. This is a big jump for Tesla. And we're going to sit there and look at their earnings release to see what information they had in there because they missed on revenue by $200 million. Tesla's a great company. They make a great car. I own a Cybertruck. There's no denying that FSD has a lot of potential. But even with that potential, the question is, what are you buying right now? Over 85% of the revenue from the business comes from cars, but there's still that huge potential in the future. And remember, I always say, every investment is the present value of all future cash flows. That includes the software and FSD that are not monetized fully right now. There is a lot of potential there. And it's important to understand that as a piece of the business. The question is how much you value that in the business. There's some people out there who say, if this FSD stuff doesn't work, then this company is worth 10% of what its value is currently. I don't know. I think 10% is a little low because of the fact that this company, actually a lot low, this is a great company. They have great margin. They've changed the auto industry. Let's go pull up their quarterly statement to see what happened. So this is their quarterly report, guys. A few metrics here I want to talk about. This is what I love. Our cost of goods sold per vehicle came down to its lowest ever at about $35,000 per car. In order to continue accelerating the world's transition to sustainable energy, we need to make EVs affordable for everyone. If you recall, in years past, when I talked about Tesla and people said it's going to be the number one car maker in the world, everyone was assuming $70,000, $100,000 vehicles. And then you can go back and look. I absolutely said, guys, you can't make 10 or 15 million cars a year selling $100,000 cars. You got to get cheaper cars. This is how they get there. This is great. To sit there and see with costs so high up these days, with inflation beating everybody up, their average per vehicle also includes selling a lot more inexpensive cars, hit right here. A couple other things, guys. $2.7 billion in GAAP operating income, $2.2 billion in GAAP net income, and operating cash flow of $6.3 billion and free cash flow of $2.7 billion. Let's see how that compares to the past. Let's pull up their cash flows. Now they're up 7.5% just in the few seconds I've been talking. So, quarterly cash flow statement. Last quarter, they did negative $2.5 billion. Previous quarter, 2.06, 849, and $1 billion. Right there. So their $2.3 billion in free cash flow is significantly higher than the $849 million they did in the same quarter of last year. Guys, that's incredible. That is absolutely incredible. That is a huge number. Here's another one. Cybertruck became the third best-selling EV in Q3 in the US, behind only Model Y and Model 3. So the top 3 selling EV vehicles: Tesla, Tesla, Tesla. Guys, tell me how that's not impressive. It's absolutely incredible. I love it. This is over 2 billion miles driven cumulatively on FSD supervised as of Q3, with more than 50% on version 12. My car got updated to version 12. I have not used it yet. I don't drive my Cybertruck a ton. I got it wrapped in white. It looks pretty cool. In fact, should I show a picture of it right now? There is that beauty right there. Do you guys see it? Beautiful car, great interior, very practical because it's simple, and that's what I like about it. So, total automotive revenues. Look at this growth rate here. Actually, it's down from Q4 2023, but from Q3 2024, it's up 2% actually. Wow. Energy generation and storage revenue up 52%. Services and other revenue, which includes some car money, is up 29%. That's impressive. I'm actually surprised the car revenue wasn't up significantly higher. Guys, some great things here. 20% increase in gross profit, 195 bips, 1.95% increase in GAAP gross margin. That is big because Tesla's had an issue in recent years of their gross profit declining. This is a great metric for them. They need to get a hold of that to not be just a car company. If I start seeing 12, 13, 14, 15% gross margins all the way across the company, I'm going to sit there and say, it's a car company. This is a nice, I like seeing this. 17.9, 17.6, 17.4. Increase to 18, increase to 19.8. That is great news for them as a company. Operating expenses down 6%. 6%. Income from operations up 54%. Operating margin up 3.23%, which is huge. Look at this, 7.6, 8.2, 5.5, 6.3, 10.8. Guys, I like what I hear here. I understand why this company is flying after hours. Let's see where it's at right now to see what we can... 7.5%, up $16. Guys, incredible, incredible business. And you know what else I love? Look at this free cash flow. This free cash flow is awesome. $2.7 billion with capital expenditures being 3.5. Previous quarters, 2.3, 2.8, 2.3, 2.5. They crushed free cash flow, the highest they've had in this, probably in history, by having record capital expenditures. Man, oh man, great company, great report. You know, guys, me as an investor, I don't care about the quarterly reports in terms of making me decide if it's a good company or not. But this tells me they're better on the path for being a better company after this. If this can continue on, this is going to be a great company. But of course, you have to ask the question, does that mean the price is justifiable? Remember, I will always tell you, the average car company sells for between 0.5 and 0.7 times revenue. This company is currently selling for 7.8 times revenue. Again, if it's more than a car company, I can understand a higher price to sales ratio. But you gotta also remember that major tech companies, software businesses, should sell for between 7 and 10 times revenue. So if this is 100% software, it's about where it should be with a lot of growth potential, but it's not 100% software. Right now, it's over 85% auto. So you look at that going, okay, there's maybe some financial things here that you get yourself around. But guys, if you're new to the channel and you like what you're hearing about the market recap, about the quarterly reports, about these companies, subscribe to the channel. We do 3 or 4 videos a week where we react to market news, earnings, and guys, it's a big earnings week. We're gonna have a lot of earnings coming out this week and next week, and the market's fluctuating. Again, today was a big red day. Check out this red. Some positives here in the middle in smaller companies, but the biggest companies drove that market down. That's big. And guess what? You're going to want to be here. If you're new and you've never seen me, even on this channel or our main channel of 275,000 subscribers, I am the voice of calm when things are hectic, whether it's high or low. When things are high, I say, guys, don't chase the hype. When things are crashing, I'm excited. I'm like, guys, opportunities to buy. I look for opportunities to buy. I don't brag about the stocks that I buy that go up. I have a list of every single stock in the world has been up in the last year, mine included. But I'm here to assess companies, give my viewpoint of how I look at it, and realize that when you buy a stock, you're buying a piece of a business. So if this makes sense to you, subscribe to the channel and watch out for our videos. Thank you for your time.